Hello viewers, welcome to the Proven Trading Setups. Myself Brijesh Bhatia. Well, in the last video, we highlighted how to use stochastics, the momentum indicator, and I've turned the table how I use it and how you can implement. So there was always a miscontrol between how to use stochastics, going into overbought zone, oversold zone, and you miss the rally. Well, in today's video, I'll show you how to identify the real strength behind the price trends. We'll discuss one on oscillator or one indicator similar to the stochastics, where prices go into overbought zone, oversold zone, and you tend to miss the rally. So let's look at the first is the RSI over here. So here we'll be discussing on RSI. So for me, in a simple layman term, RSI is the stamina of the bullish or bearish trend. So say you daily run 5 kilometers and on a one day you run 8 kilometers, the stamina already goes down post 5.5 or 6 kilometers. You gain your energy probably and then go again, or you might reverse, turn back to the level 0. Similarly, RSI plays a key role as the price action. So in simple terms, RSI goes up when an average gains is greater than average loss, and RSI goes down when your average losses is greater than average gains. So look at this RSI first chart. This is an example of price and RSI. So if we look at between August to October, price rallied on a faster pace, RSI also went on a faster pace. Similarly, price fell on the faster pace, RSI went down on the faster pace. So RSI ranges, and generally above 70 is generally known as overbought zone and below 30 is generally known as oversold zone. But most of the technical indicators or traders who use this RSI and term is that overbought zone and oversold zone, do they really work? Avoiding longs above 70, avoiding shorts below 30, do they really work out into the practical price action? Look at this chart over here, RSI monthly chart, and on a monthly when prices were around 650 split and dividend adjusted, RSI was above 70 and Reliance went on to 1500, 1450, 1500 levels. Still RSI was in overbought zone. So if you look at RSI overbought and avoid going long, you tend to miss those rally. And there are various technical analysts who have proven this system of RSI. So let me look at the short side of oversold zone example. So look at the Tata Steel over here. When prices were around 420, it went to the oversold zone, and price still 265 to 50 went on the downside journey, and RSI was into oversold zone. So you missed to 10 those short opportunities. Well, there are some of the terms which are very much important when it comes to the RSI. Divergences. So what are divergences? So first, when prices hit lower low and RSI doesn't hit lower low, it's called positive divergence. Vice versa, prices hitting higher high but RSI don't hit higher highs, it's a negative divergence. Another concept is called triple divergence, where prices continuously hit lower lows, at the same time RSI hits higher low for consecutive times. That's known as triple divergence. So vice versa for negative triple divergence. So there are some examples. Look at this Nifty. Prices tends to go lower low, RSI tends to go higher low. Again a triple divergence over here. Nifty negative divergence, prices forming higher highs, RSI forming lower highs, and prices corrected. Manappuram stock, prices form higher high, a divergence on the negative side. There are another concept called reversals on RSI. It's basically opposite to divergences. Your prices form higher low, but RSI forms the lower low. Negative, prices form lower high and RSI forms higher high. So this generally comes as examples are M&M Finance. Look at prices form higher high, RSI forming lower high. So that's the reversals plays out? Well, this is again a debatable on how to play divergences and reversals. And I'm sure those who trading RSI for quite long have experienced this problem of how to play divergences and reversals, right? You might also have faced this issue. So I have, even at the start of my career when I was using RSI oscillators, I used to find these kinds of problems frequently. But I, being a Fibonacci trader for quite long now, more than a decade, I have introduced one system, okay, where I'm using Fibonacci with RSI divergence and reversals. So when those who were trading RSI divergences, you take a trade and pray in a hope that this will work out, or you wait for a confirmation that okay, yes, prices have formed higher highs, divergence has played well, and by the time you realize that yes, it's giving a confirmation, price is out of your risk reward. Price tends to move 10%, and 10% taking a loss of 10% is out of your pocket. So this is a key problem with RSI divergence. So what I've done is I've added Fibonacci. Now you can try this before taking a trades. And again, in the previous videos, if you remember, where we have taken a Fibonacci session video, look at that videos where we have used various Fibonacci numbers, and the same Fibonacci numbers I'm using over here. Okay, so now what happened is when prices are very higher high, it resisted at 127%, and at the same time you saw that negative divergences happened, and look at the price corrected then. Second example, Fibonacci price divergence, prices made lower low over here. It taken a pause at 161.8, and RSI divergence has happened. So you got a good reversal move over here. Okay, so that's the way you can play with Fibonacci. But I want to share one RSI strategy which I have been trading for quite long, and this strategy is for investors. Well, people believe that technicals don't work for investment. It's being a trader's cup of tea. For a short-term trading, it's really helpful. But for an investor, I'll show one strategy. So there are some rules to the strategy. Is RSI should be over here is 162 period. So I'll take RSI as 162. Generally, the default one is 14 period, and 7 period some of the people use for trading. But I'm using here for investment side at 162 period. Second rule is that buy RSI, buy when RSI closes above 51. And my stop loss is at the RSI closing up below 47 or 15% loss. So for those who can take an 15% risk on that capital, this strategy is for you. If you are unable to take 15% risk on your investments, please don't try this. Okay, so let me show some examples on how this strategy has worked. Look at the Ultratech over here. First, initiated a 1010 buy when it closed above 51. Gave an exit at around 1540. Again, it gave a buy at around 1915, and it gave an exit at 3600. My next entry, which I got, was around 4075. It got exited somewhere around 3460. Again, if you look at 3460 and the lower panel over here on the chart, it didn't give a close below 47, but my 15% rule came into the place. So I exited my positions. Again, it gave an entry at around 4325 last year, and it's still running. We are at around 7000 plus into the Ultratech. Second, the elephant, Reliance Industries, gave a buy at 410 at 2013. And you might tell me that I was a fool to buy in 2013 till 2017. It made nothing. But yes, system is a system. I never knew that till 2016-17 Reliance will do nothing. But look at the stellar rally I got. I exited at 1024, which is 2.5 times. I re-entered at 1330 during the last V-shaped recovery, and we are about 2000 levels and still continuing. The last chart is very much important and close to my heart because I've traded this as per the system. Again, I would not deny that it was slightly biased at industries because I know their management personally. I met them. I know company is very good. at that point of time as well. But sticking onto the system for entry and exit was very much important. So I entered at around 14 rupees 50 paisa, exited at 16.25, re-entered at 21, and that was my best trade, best investments of the, you can say, the decade of my life still. And you know the price, it's been 4 digits now. So since then, I guess in 2014, it never ever crossed below 47. Neither it gave me 15% loss. And that's the beauty of the system. One trade changes the life every day. So I'm very much fortunate that I've used this systems and I got Aarti Industries. Well, coming on to the strength, it helps you identify the strength into the rally. RSI divergence and reversals play at the early, gives you early signals of trend changing. Using a Fibonacci helped me a lot. You can try it out at your end. Again, weakness, there are some weaknesses with this. Can be an overbought oversold zone for a long time, so you need to keep a watch on that. uh, with the major problem with RSI is you don't get defined targets and stop losses. That's the bigger problem, so you don't know when to keep the stop loss. So that's the reason I've kept 15% as my capital stop loss over here. Just to summarize, RSI is a great tool to identify the strength of the trend, being a bullish or bearish. Divergence and reversals play a key role. If you identify, as I said, I used it with Fibonacci number, gives me a good conviction levels. Earning signals in RSI maximize profits, and the strategy which I shared on RSI for an investment basis will be, I guess, hopeful for benefit for you, and you can try it out. Well, that's what in this video, but in the next video, we'll be discussing how to predict stocks next move just by looking at the volumes. And volumes, I must say, plays a key important role to identify what's coming next. So stay tuned on to our video trade series, and I hope you are liking our video. Do comment how do you like our videos and strategies, and I hope this will really help to my trading community. Thanking you, Brijesh Bhatia.
I am delighted that you joined me to learn about my proven trading setups. If you would like to hear more from me, then sign up for the Fast Profits Daily, our free email newsletters. You can click here to sign up. Thank you.